Hello, can you hear me now? Oh, sorry, I had muted a little bit. So yeah, we're here. We want to discuss about the Fibonacci retracement. Sorry, I had my sound lost a little bit. So we want to see how you can use the Fibonacci retracement tool to find the support and resistance levels, discount and premium zones, and how we're going to use them to enter trades, right? These are the steps that you're following. First of all, you identify the trend. Number two, once you find a trend, then identify the retracement levels, and then with the retracement levels in place, then identify the discount and premium zones, and then go ahead to get a confirmation for an entry. So while my voice was not clear or my sound was muted, I was trying to say, or what I was explaining is, what you're considering to draw a Fibonacci is like a complete wave. If you see a complete wave, for example, here, you see there is this move from here up to the top, this level here. That is a complete wave because there is a support here, right? There's a resistance. There's a high and a low. That is going to give you an idea of where to draw the Fibonacci. So for example, for this one here, you could have drawn the Fibonacci from the bottom to the top, and you're looking at how far the price could pull back before it resumes an upward move. So in this case, with this move which you're talking about here, this one, this move which you have here, you're looking for how far can it pull back before you get a good strong move to the upside. And this is what you could have gotten with Fibonacci retracement. So that is an example. Let's look at something else. Open the market watch. Let's open another one so you understand. Here you have another chart. Color on white. Yeah, so you have this one. So where do we have a trend? Or which levels are we talking about? On 1 hour, for example. Do we have a trend? Trying to find one. So one significant move. For example, let's talk about this one here. This move here. All right. This one here. So if you consider this price pattern here, you see we have a downward trend. Like we have this top, that top, and it's making, let's use market structure, right? We have that high, then we have got lower highs at this level. Lower highs, it's a pure downtrend now. The next one, we have a downward move, right? So it's making successive lower highs. So we're expecting a continuation or a continuous downward trend in this case. So let's say, for example, we are at this part here. We identify that the price is moving is confirming a downward trend with the market structure. On the downside, you will see that the price is breaking the lows, creating new lows, right? Break of structure, another break of structure here, and the next we have a break of structure here. So what we want to consider for now is this move here before we had a downward move. So this is what you would consider for the this part is what you would consider, or this downward move is what you would consider to find an entry to the downside, right? So that you could have gotten this downward move here. So then, how could you have done it? Let me remove these lines which I have drawn, or maybe we can have them there as well, right? So you go get the Fibonacci retracement. So for a downtrend, this is what you want to see. Usually the price is moving in a downward move, pulls back a little bit, moves to the downside, breaks the structure, pulls back a little bit, breaks the structure again, goes back to this level, pulls to the downside again. So what we want to see is, you see, anytime the price pulls back a little bit, then you have a very strong push to the downside. The price pulls back a little bit, then you've got a very strong move to the downside. So we want to see how far is this price likely to pull back before we get a very strong push to the downside. So which level? That's the level we want to identify. So in this case, because it's a downtrend, then we are going to have a Fibonacci right from the top here, because this is the part which you're considering. We pull the Fibonacci right from the top here, all the way down to this level, and then we see how much is it going to pull back. So you'll be considering this whole move like a 100% move. Now let me remove all this. Let me clear all these marks. So you're considering this move from that level to this level down here, and you would consider this one as a 100% move. So you're trying to figure out or trying to find how far is this price going, what percentage is going to pull back. Maybe if this is like 0%, 100%, right? Is this price going to pull back up to this level, maybe 10%? Then you have a strong move to the downside, right? Is it going to pull back around 30%? And then from there, you have a strong move to the downside. Is it going to pull back? Because now the middle point is here, to pull back 50%. And then after that point, you have a strong push to the downside. That is simply what you're trying to find with this Fibonacci. Or is it even going to push all the way to around 60%? And then after that point, that's where you have a very strong move to the downside. Yeah, that's going to be like, how far is the price going to pull back? So if you have a downtrend, you want to pull the Fibonacci from the top all the way to the lowest point, and then you will have levels drawn. Now, before let's put the Fibonacci here, and we have specific levels that you look at. Now, when you go at the top side of your chart, you will see the tool is, let's look at the top. The tool is just there, right? That is the tool with those levels. Or you can go to insert and you still find it there. If you're using the phone, you find it on the objects as well. Now, let's draw it. At the top of your screen, let's go pick the Fibonacci, and because it's a downtrend, now you draw it from that level, and you pull the price, or you put that tool all the way down to the lowest level that you had there, okay? And you want to pull it to the right side, so you can have, you can see those levels. Let me remove these other objects so you can see it clearly, right? Let me remove the objects so we can see it clearly. You go to the objects list, and I will remove them. I will select all of them. I will leave the fib. I'll select all of them and delete them. Delete. List all and then delete. Right, so I go and select the Fibonacci. From that point all the way down there, and then I can pull it all the way to the right so that I can see those levels extending. And you can see the levels. So 100% at the top, 0% down here. Now, here I have put the 50% level. I can set this one to default, so you can see other Fibonacci levels that you can easily use. So I'm going to reset these levels. I set it to default, and let me put red color. I want to see yellow. So you have all these levels, right? We have 23.6%. So this one means is the price going to pull back all the way to the 23.6 level? Let me position the chart of the middle so we can see this is 20% level, right? Let me highlight for the ones who maybe are not able to see. So talking about, for example, this move from here all the way down here is the price. So this move to the downside here is the price going to pull back to this level here, which is 23.6%. Then after that, you have a push the downside. Is it going to pull back all the way to this level of 38? So these are the common Fibonacci levels, that 8.2%, as you can see there, and then the price pushes lower. There are instances where you have the price retracing to these levels, by the way, and pushing lower. All right. And then we have this 50% level. Will the price push all the way to or retrace to 50% level? And then after that 50%, we'll have a strong push to the downside, or will it move all the way to 61.8. And then after that level, then you have the price pushing lower. Now, at this point is where we identify the premium and discount zones. So with this move, remember we said, and we defined this one, the premium and discount levels. If the price is playing above this 50 level, this is what we call the premium. Okay. In SMC approach, this is premium. If the price is below the 50% level, this is the discount. Okay. It's a discount zone. So this is from the 100% premium zone here. This other one, discount. Right. So because we are on a downtrend, we have seen that one from the market structure that we have here. We are on a downtrend. I can zoom in a little bit so you can see we're on a downtrend. How did we identify the downtrend? We are looking at the market structure. This was a high point up here. Let me mark using boxes. This is a high, right? The next one you have a lower high. The next one we get a lower high. But then this is what gave us this move. Look at the downside, we're having several breaks of the lows. So in this case, just to cut this long story short, and for this Fibonacci, because we're focused on the premium and the discount zones, I'm going to edit this Fibonacci. So I have my 50 level only. So I can go and just right click, go and edit. I will delete that level. I delete that 8.2. I don't need it. I delete 61.8. I don't need it. Right. And all these others. So I'll leave only 50%. For my case, there are others who would want to leave these other levels, but it's okay. It depends with you. Let me leave these levels for matters of just checking out or checking on the premium. Okay. And down here below the 50%, the discount. I remember I've said that because we're looking for a sell, this is a downtrend, we'll focus to enter our trades to sell mostly once you have the price around the premium. That's why you have the strongest move. And you can see this one, the strongest move started right from above this move. There were other attempts for the price to react, move to the downside below the 50%, but it's not as strong mostly. Yeah, not all the times, but mostly not very strong. You find a strong move, a strong push starting from the premium side if you're on a downtrend. So let me remove these drawings. We go back to look at it. Now, here we have our Fibonacci. We are trying to see how we could have gotten an entry and catch this move down here. These that I have marked in gray. Yeah, how could you have gotten this move here? So look at this price. The price, we have this move. The price pulled back beyond the 50, got into our premium zone. which you have here. And that's why we're looking for entries. There are, remember, there in our other sessions, we looked at order blocks. So when the price pushes or pulls back to this premium zone, that's where you want to identify potential order blocks, right? Potential order blocks, and you would find them potential order blocks or even fair value gaps, right? So in this case, we have got potential areas of interests around a level like this one, right? That one, potential level of area of interest, okay? And there's another one here as well, even this part, because of this candlestick, but this one was invalidated. So the price pushed back all the way to this area, just touch it a little bit, and you had a very strong reaction to the downside, right? So once the price pushes back to the to this premium zone, look for order blocks, right? Or potential areas where there are interests to sell. And look at this one, right? Look at this one. You might consider this one, or look at the previous move. Actually, you see, now when you're talking about the order blocks, you might look at, for example, this one looks like a breaker structure. Okay, so we had a very strong move. Let me explain. Let me just draw. So here we had a move to the upside, right? Push to the downside. Then this level here was broken to the upside. And then we have this strong move to the downside, right? So this is more of a breaker block, and the price pulled back to this area here. So you might want to consider this level here, or this candlestick. And if you draw this zone to this other side, you realize that this is the level that the price came and tapped in. Or you can use this area here. All along, the price has been reacting around this area, that level. And that's where you had the price tapping in here. And then you had a strong reversal to the downside. Okay, so looking at this Fibonacci retracement here, it is above the 50 level. This is a premium. Okay, remember, they are not 100% accurate. All along, we're trying to find possible good entries, smart entries. There's no one strategy which is 100%. So even these order blocks and these approaches, sometimes, for lack of a better word, they refuse, or they may not work. Okay, if it gets invalidated, you look for something else, some other clues, and that's where now it calls for us as traders to look for more confirmations. For example, what else could you have used to confirm this one? Look at the candlesticks, right? How are the candlesticks reacting? So there are traders who want to get in. They are called sniper entries, just want to get in exactly when it touches here. So those are the traders who place pending orders. On Monday, we looked at pending orders. So traders would place pending orders around this area. Remember, if you consider this level here, okay, or that order block there, you can go lower to refine it, but then you can enter right at the low level of that order block, or at the middle of that order block, or at the top. So if you enter right below here, you might be considered a little bit as aggressive, okay? But this is a type of a trader who do not want to miss the chance or miss the opportunity by any chance. At the middle, a little bit conservative. At the top, very conservative. So the guy will be entering at the top. You're likely to miss this trade by a whisker, if in case you have that type of an entry that we have here, right? But at the top, then you're likely to have a strong, a very nice reward to the risk, because you'll be having a very tight stop loss, which is sometimes good, not very good as well. Very tight stop loss here, right? And if it pans out properly, then you have a very big reward. Okay. But again, being too conservative in trading. Remember, traders, we manage risk. Okay. We don't really fear risk, we manage it. So if you want to have this very tight stop loss, again, that's why we miss it with smart money concepts. But for someone who have got their entries around this level, yes, you might have a little bit exposure to risk, because this price might even push a little bit here, but then have a strong move to the downside, if at all it was a downward move or a good area of interest. So this one also makes a big difference. Where do you enter with the order block you've gotten? At the bottom, at the middle, or at the top? For me, I would want to consider entering right at the bottom here, at the start. I don't miss the opportunity. Then I've got this risk. I've got a higher risk exposure, yes, but still, if you consider this reward which came up, it's so many more times. It's a very big multiples of R. Okay, this is the risk. Yeah, and the reward is enormous for the trader who could have gotten this one. Remember, we're on 4 hours. Okay, this is a trade someone could have held for a long time. I hope that one is clear here. So an entry here. So what a trader could have waited for is this confirmation candlesticks. Also look at the types of candlesticks forming here, right? We have sort of a pin bar at this level. Not a pin bar, yeah, there's a pin bar which was engulfed again. If you wanted to enter this trade properly, then the best approach again is to just move back a little bit and try to just like you're trying to refine that entry, move back a little bit and look for clues, right? There was and by the way, at this point, there was a very clear order block, because now look at this one. Look at that. And that is where the price tapped right at the middle. Right at the middle. It was a very strong move to the downside. You can even refine it further. You move lower, 30 minutes. Okay. And I don't know whether we can find it now. Yeah, it's here as well. You can even refine it further. And now we have something closer. You can even move further down and you find very nice entries. Remember, I've used 4 hours so that you can have something clear. So with that entry and stop loss just above here, again, it depends with your risk management. There are those guys who want to have it just above that area of interest, or it depends what you apply. But with this entry, look at how we had a very strong move to the downside with the confirmation here. These are aggressive candlesticks to the downside, right? Once, then where you targeting to take your profits. Once the price goes back, remember you're getting this trade right from, like, you're getting 2/3 of this move. Okay, let's consider this, for example. This is your entry. If this is the 100% of the move from the top to the bottom here, right? This is like 1/3 of this move. And from here all the way down with this entry, you're getting 2/3 of this move. Yeah, 2/3. This is around 60 or like 75% of the move. 75% of the move. This is a very big reward that you're looking at here. So again, exercising some level of satisfaction will help you win much with this strategy. So this is a downward move. Let's look for an uptrend. Or what else could we have used to confirm this entry? Let's insert some indicator like the oscillator for confirmation. Let's talk of momentum, for instance. Let's see whether we had a momentum confirming, right? Where is the momentum indicator? Again, we have a problem here now. We will lose the screen a little bit and then get back. Bear with me. There we are. And in a few seconds, we will be back again. Sorry about this. Sorry, guys, in a few seconds, we'll be back. And we should be back now. Please confirm once you can see the screen. We should be back now. We should be back now. Not really. Few seconds, 1, 2, 3. Oh yeah, there we are. So I wanted to insert an indicator. Let's go to oscillators. Let's add, let's say for example, momentum. And when you're doing momentum, you want to have level 100 on the levels. Let's insert it. If you've come in my sessions, we've looked at this one several times with the trader. So look at this one. We're on a downtrend. We've confirmed this entry at that point there. Then let's consider, let's look at the momentum. At this level where you're looking for an entry to the downside, especially with this candlestick, you can see the momentum has gone below 100, right? And here we have that move confirmed to the downside. That was around 84 pips. Okay. If you had gone lower, maybe to 1 hour, and trying to confirm the same entry, right, at around this point here, because I would support going to a lower time frame to confirm your entries. Look here, when you're getting your entry at this level, if you check down there, you see that your momentum has gone below 100 to support bearish momentum. Again, let's say, for example, we're not using momentum, we're using RSI. Let's go insert indicators with the oscillators. Then we do relative strength index. I would prefer we use the level 50, because now here we want to see bearish or bullish, just a confirmation of the bearish or bullish level. So for the RSI, here we are at the same level where we're confirming the downward move with that entry at the top there. RSI went below 50, confirming bearish move. If we're not using RSI as well, and we wanted to use stochastic, I don't know whether stochastic will confirm this, but let's see whether stochastic will confirm this. Sorry, having difficulties removing these ones. Let me remove them. Then we add a stochastic oscillator. This is finding a confluence with other indicators. Stochastic oscillator, where is it? It's lost. Oh, again, we have to lose the screen a little bit. Stochastic coming up on the other side. So sorry about this. Oh, not good. Promise this time it won't take long. Sorry about this. So in a few seconds, we'll be back. We should be back now. Sorry about that. Right. Hope you can see my screen. 1, 2, 3. Yeah, there we are. Good. So I was adding a stochastic oscillator. You go to the insert indicators. We do stochastic oscillator. Here we are. I put 14. So to reduce the noise. So click OK. There we have our stochastic oscillator. Now for the stochastic oscillator, it helps confirm support resistance areas. Now in this case, remember we are using these what we call it, the Fibonacci retracement levels, to give us possible support resistance areas. And mostly the stochastic, whenever you have the stochastic oscillating from the top to the bottom or from the 80 area to the downside, then most likely you should have the price pulling back or bouncing from a resistance area. In this case, look at that. That's leveled there. Let me use, let me mark with a drawing tool. Look at this area, getting the resistance to the downside. The same case when you check on the stochastic there, also moving from the overbought zone, moving down. So confirming the resistance. So all those indicators, you can use them to try and confirm your levels that you're talking about. This is the stochastic. Of course, we have the RSI. All of them are here. You might not use them at once, okay? But you can choose which one you want. If you add so many indicators, again, you'll be caught up in some form of paralysis. So you don't want to do that. You can just choose one and go with it, right? That is seeking, what do you call it? Seeking a confluence with different other indicators. Maybe we can look at a possible bullish move, and then you call it a session. So let me go for, is that gold or can we do, let's try out an index, German DAX. But for the indices, remember, you trade indices just the same way that like you'd want to trade the other instruments. But again, for these indices, they are heavy on fundamentals. I see we have a question here on institution reference. When talking about institutions, you want to speak more about the fundamentals, right? So you trade them more or less the same way. But now let's see how you can bring in the Fibonacci retracement, and I'll find a trend. So in this case here, you can use smart money concepts when you're entering in a continuation. In this case here we have a trend, a downtrend, right? But if you're applying smart money concepts, I would encourage you look at a trend using market structure. That's a high. You move down here, you've got a lower high, right? Lower high, lower high. And then right at this point here, you had a break of structure, which after some level, there was a pullback and there was an entry at this level all the way to the upside. So let us look at an example where you could have entered on a downtrend, right? Continuation on a downtrend. This is German DAX, by the way. So you know that you can trade, you can use the Fibonacci and this smart money concept to trade even these other instruments, okay? And on the downside, remember you have the break of structure here, confirming the downward trend, break of structure here, another one here, break of structure. I'm using the red ones, break of structure here, right? And there was a lot of liquidity around this point, okay? Because they are almost equal lows at this level. Okay, then there was a sweep of this liquidity, price move to the upside. That is something else. Now, let's consider this level, this downtrend here, which I have drawn a trend line. If you were to find these entries along these levels here, for example, use this one, or there was a break of structure here, which could have confirmed, no, this is change of character, this level, the price changed the downtrend. You can see this now is a downtrend. So you want to confirm an entry from this point here, or even this point here to the downside. How could you have used Fibonacci retracement? Or this point here to the downside, how could you have used Fibonacci retracement? Or this point here to confirm this downward move? Sorry, I'm drawing this thing like I'm drawing some gender symbols. That's not what I am doing. It's just coincidence. Sorry about that. I'm just want to highlight these levels. So how could you have used Fibonacci retracement? We could have just, because it's a downtrend, we're looking for a sell. So we could just consider this move down here. And let me use the Fibonacci retracement tool. We draw it. See how I could have gotten a sell. And we are looking for a buy, but we're finding sells only. So we take this one, and this is the move which we are considering. Just draw from that top all the way to this bottom, extends a little bit, and you find for this one we got an entry around the 50% level. So in this case, there is mostly the order block. I don't see it clearly, but look here. And this is where now you want to confirm with other, to confirm your entries with other approaches. Here we had a support, which turned to a resistance. This is an entry to the downside, and you can see how the price went down and down and down. This is a lot of pips here. Now, we're done with that one. Let's move to the next. Okay, so you've taken this one. Those are pips you've already gotten into your pocket. You're looking this one, you've gotten these ones. That's okay. Now the price is pulling back. Now we want to consider this move now, this time round, and see whether you can find this entry right from here to the downside. What do? You go and take your Fibonacci tool again, right? Go there, take your Fibonacci. It's a downtrend. We're not yet eating up this downtrend. Yeah, you pull your Fibonacci from the top there all the way to the bottom, extend a little bit so you can see your 50 level. Now this is where you're looking again, the same concept of support turning into resistance. And at this point here, look at how the price actually made even a double top and pushed to the downside. Crazy reward here. Let's say, for example, you get these ones. We're still not yet done with this trend. We have this one and this one and this one. Gotten that profit all the way down here. Okay, so we also now we have a pullback moving to the downside, and with this one, for the guys who are conversant with the smart money concepts, we have liquidity building up here and here and here, right? So you go take your Fibonacci again, right? Let me move it. We'll take your Fibonacci. Let's move this one. Now we're done with this one. You got a profit. Won't find this entry at this level here. Let me highlight that level. It can be clear. Right from here, want to see how can we get, after this pullback to the upside, where can we get an entry to the downside, right? You can as well consider candlestick patterns here. So you need to have several concepts in mind that you're going to use for your confluence. Remember, we'll not even put the indicators down there. Now here, let me go get my Fibonacci again. Get your Fibonacci tool. This is the move which you're considering. Pull it from that level all the way down. And you see, right at the premium, there was an entry at this point, and we got it all the way to the downside. So you might wait for this candlestick confirmation here. Let me erase and show you. So if I remove this one, look at the candlesticks forming here. Very long pin bar. Yeah, very nice pin bar forming here. Then a confirmation. If you go to a lower time frame, you will find that there was, see, let me a lot of things coming up now. If you go to a lower time frame, right about this section here, you find that you will find some kind of let me show you some kind of a channel forming, right? You have to combine several concepts here for this to get confluence. So like, for example, here you see you have some form of a channel forming here, right? Break to the downside, look at something like this, right? Yeah, break to the downside, entry, you have got all this profit, right? Pulled back a little bit again, and on a lower time frame, 15 minutes, there's even something coming up here. You can apply this approach even on lower time frames. Any time frame is okay. So look at this one. After you see this little bit pull back to the upside, you might want to use a Fibonacci for that, from that point to this area, and then again at the 50 level, another re-entry to the downside. Up to this point, you need to have been to have gotten satisfied with the profit and get out. That's how you could have used the Fibonacci to get all those entries there. And now for the change of trend, let's go back to 1 hour. For the change of trend, you're done now with this level. We have, let me highlight this level here. Price, you've gotten all these The price has gotten all the way down here. Now you have a strong reversal to the upside and it's pulling to the downside, right? Let's consider this move, right? Because now it has broken, it has changed character at this level, is what we call choke. Okay. Now, let's try and get the Fibonacci at this point. Now, because we want to find an uptrend, now we're going to pull the Fibonacci from the bottom here all the way to the top, and then we look at where we got the entry, exactly the discount level here, below 50. And there was an explosive move, which is already active. This is German DAX. This is an index, right? It's not a currency, it's an index. So how do you trade indices? I find these questions, most of how do you trade indices? The same way with currencies, yes. But again, for the indices, you need to align with fundamentals, understand the reports coming up, what's happening on that side of the country. All those releases will help you. And good enough, we have got sessions covered by our market analyst Rufus every day at 11 a.m. So you can get, it should be easy for you to get these updates. And ladies and gentlemen, that's what I had for today. I don't see as much questions, but I see here, where do you refer from when you're doing different time frames to confirm a good entry? So if you want to find a good entry, I mean, you find a good entry on lower time frames. That's where you're going to refine your order blocks to find the sniper entries. But I think the sniper entries, the ones that we call sniper entries, you might miss a trade because you're looking for a sniper entry. Sometimes it'll be a little bit, it's going to be risk averse, yes, okay, and very conservative, but remember, you're here to manage the risk. So sometimes allow a little bit of risk, but then looking at the reward, which you're likely to get. So find your trend on higher time frames, go refine that entry on lower time frames, and you'll be better off. And again, apologies for the first few minutes that we missed on the sound. Thank you so much for notifying me. Thank you so much, Nicholas, Anthony, Irene, BNE, Kevin. It's been my pleasure explaining these concepts to you, and I hope you're going to practice and understand how they work. So I hear that when you pluck the guitar too much, you might cut the strings. So let me not play it too much. Let's save it for another time. So thank you so much, guys. If you want to refer on the smart money concepts, just refer on our sessions that we've done previously. We've explained about order blocks, about the market structure, discount, premium zones, and all that. Please refer to them and put more practice, right? Remember, this one comes with more practice. Thank you so much. See you next time. Bye.